in course to achieve this kind of an annualized run rate. But yes, I mean, the early part of, the quarter one and quarter two did have some pressure on kitchen sales in line with the pressure in the industry. Yeah. So yes, I think the quarter three, quarter four, and maybe quarter one of next year, you will see the run rates trajecting in this range that what we had guided. Yeah, but annualized, I think there would have been some pressure in quarter one and quarter two because of the overall slowdown in the kitchen industry. I think this you have seen across all major industry players.
Right. Also in your electrical segment, I think wire growth is what is bringing down the electrical growth. I mean, if you could just help us understand what percentage of the segment is wires, and what has been the year-on-year growth in wire segment in this quarter or maybe the first half.
No, I think the wire business this quarter has been under pressure. See, wire is very the short term performance of wire business is very much linked with copper prices. Yeah, so whenever there is a significant upside or downside in copper prices, you will see that the trade is upstocking or downstocking, right? And that's really what we are witnessing as far as wire is concerned. In the quarter that passed, for which we have declared result. Last year in that period, I think through to the month of January, there were significant increases in copper prices, and that led to trade aggressively upstocking. So the base period numbers are significantly higher. Yeah. Whereas the current period sales is more normalized, and and that looks like a very modest low single digit performance in wires. Yeah, so that's basically what you're witnessing. But I think as the period stretches, typically an upstocking cycle, right, is followed by what I would say lower than normal offtake, and over a slightly longer period, the sales normalize. So it's basically shift in trade inventory, and that reflects in the short-term sales being up or down.
Right. So it's basically shift in trade of inventory and both copper, the raw material copper prices that are basically affecting. Okay, understood. In terms of your manufacturing, what percentage of your manufacturing is in-house? Let's say if we compare it this quarter versus the last quarter in the same year, Q3 FY23, and what are the plans going forward with respect to expanding your in-house manufacturing capabilities? Like, do you plan to become more and more self-sufficient?
Yeah, I think we have over the last 4 years, particularly post demon and GST, and in line with the Make in India focus, we have expanded our manufacturing capex, and the share of manufacturing is progressively going up. I don't have top of mind, precise numbers, but what I would say is that as our capex cycle, current capex cycle comes to an end, by I would say the Q4. I mean, there is some nominal investment in a TPW plant which is going to happen in the next financial year, but most of our investment is out of the way. We should hit around 2/3 of our business, 2/3 or maybe even closer to about 66-67% of our revenues coming from own manufacturing. There are categories like pumps, and there are what I would say legacy arrangements which are there, which is accounting for the remaining portion of our business, right? But that's mostly domestic sourcing from domestic vendors. Mainly, I think the current financial year, the capex deployment has been towards setting up of our battery plant, which is expected to go commercial in February 24, and a kitchen appliances plant at Vapi, which is supposed to also go commercial by March of 2024. The Pantnagar facility, which went commercial last financial year, has now fully has reached full scale. and we are able to see the expected benefits flowing through in our P&L. So I think the progress on our manufacturing direction has been great. Yeah. And we continue to seek opportunities to improve our manufacturing footprint. So that's going to continue to be the direction that we are going to play going forward. Yeah.
Right, so you will continue to be on the path of being self-sufficient. Okay, my last question to you would be, can you give us an outlook for FY24 and FY25 in terms of both top line and bottom line that you're expecting?
So we are generally not giving a guideline, right? But broadly, we set our plans around 15% top line growth and 20% bottom line growth. This is typically what we've been attempting to do as a business, over the last decade. Yeah. I think at this rate, we are able to well balance investments for future. Yeah. So that we build our capability and we build our competitiveness, right, hand in hand with business growth, right. I think being more aggressive, is affecting this balance, and results, poorer than this are challenging our ability to sustain investment, right. So, but this is a sweet spot where we are able to grow, faster than the market, and improve our shares. Even as we are able to sustain investments in our capability and competitiveness.
Right. Okay. So, I mean, that's a good thing that you're able to sustain your investments as well as maintain the market share that you have. Well, that's all for today. Thank you so much for taking out time and speaking with us at NDTV Profit, Mr. Ramchandran. It was a pleasure speaking with you.
Thank you, Mahima. Thank you very much.
Welcome back. You're watching NDTV Profit. Let's take a look at where the markets are right now. And it's a thumbs up across the board post the budget session. You have the Nifty 50 that's trading very close to the high point of the day, gaining about 1.3% or thereabouts. And within touching distance, just about 25 points away from that 22,000 mark once again. The broader market's also doing well. You have the mid-cap index that's gaining about 1% or so. And in fact, you have the small-cap index that's up over 1% at this juncture. All of the major sectoral indices, in fact, all of the sectoral indices in the green right now, including the Nifty Bank, which is gaining about 0.6%. But the real pack that is doing well is the public sector enterprises. And in fact, the Nifty PSU Bank building on gains from yesterday's session and gaining about 2.6% in trade today. Let's take a look at some of the key movers in trade as well. You have the oil and gas companies that are doing particularly well. And in fact, the oil marketing companies stand at the top of that list as well. So the likes of BPCL gaining about 5.8% in trade today, as well as HPCL up over 5%, and they're leading the gains. But you also have the likes of Reliance Industries that is doing particularly well in trade today as well, 2.5%, and it is supporting the benchmark Nifty 50. But on the earnings front, we've been speaking to management through the day. You have Motherson Sumi Wiring that reported quite a strong third quarter result. And my colleague, Tushar Singh, spoke with the management of the company and tried to figure out why that is. Listen in.
The gentlemen are speaking to us a few hours after Motherson Sumi reported some stellar numbers for the October-December period, where revenue jumped 25% year-on-year, and the EBITDA margin jumped 176 basis points. The EBITDA was up 46.4%, and the net profit itself was up almost 16% year-on-year. Gentlemen, first of all, welcome to NDTV Profit.
Thank you very much, and thanks for inviting us on TV.
All our pleasure, sir. So my first question is actually open to you both. You have clocked your highest ever quarterly revenue and EBITDA. What explains this outperformance, sir? What's working for you, and what are the pain points that you're seeing at this point of time?
Okay. First of all, I just want to update you that during first 9 months of this financial year, we have already achieved 80% plus revenue and 90% plus PAT compared to the last financial year. And as far as these higher, revenue numbers, I just want to inform you. One is the because of the volume, which is growing in the Indian OEMs. Another part is, which is very important, is that customer are choosing the feature-rich models or the top-of-line models. And hence upgrade is happening, and this means more content of wiring harness in the car, which is good for us. So MSWIL is always getting benefited as cost of the sales are dependent on the models, and hence the higher the model, the higher the sales for MSWIL. So these are the two combinations because of beating our last quarter revenue numbers. As far as challenges are concerned, we are not seeing as far as any abnormality. We are very much aligned with the customer on their requirement for the next financial years and the year after also, and we are doing our plans accordingly.
Okay, so essentially, if I have to say, the whole semiconductor chip shortage factor is a thing of the past?
Yes, up to an extent, yes. We are not seeing so much of information on that at this point in time, but you can't predict the future. So, but we are very much aligned with whatever, because what happened due to these shortages, sometimes customer has to change the plan. So we are keeping very much flexibility with us to cater these requirements in case there is something happens in the future as well.
Okay. Coming to you, Mr. Chhabra, just wanted to know how the revenue mix is for you. As far as the traditional internal combustion engines are concerned, as well as electric and hybrid. So where is the push coming from in terms of where powertrain is concerned?
Yeah, so as far as revenue is concerned, like it's a mix of both, I say, as well as the EVs. And we know the EV market. So our sales are also kind of growing in line with the market demand for EVs. So it's a combination of the market growth that we see in our segment EV contribution as well.
Okay, so can you just maybe quantify the amounts, sir? So are we seeing accelerated adoption of EV, and is that reflecting in your revenues?
Yeah, I mean, it's in line with the market and it's reflected in our revenues.
Okay. So I will also look, Mr. Shah, I'll stick with you right now. I was also going through your financial statement. Your cost of materials has gone up, as has the employee cost as well. So can you give us some color on these added expenses that you saw in the third quarter?
Yeah, so as far as cost of material is concerned, it's a combination of various product. It's a combination of the product mix that we produce and we sell. Now, the cost of wiring harness would be different for different customers for different models, and hence comparison of raw material cost quarter on quarter or from a specific period to another specific period might not be very relevant. It might not be a very true comparison. It all depends on the product mix, which product we are selling more, and hence the cost would kind of differ accordingly.
Okay, as far as employee cost is concerned, sir?
Yeah, as far as employee cost is concerned, if you look at as a percentage of revenue, our employee cost has rather come down compared to the previous period. Okay. So we see a good amount of productivity improvements, which are leading to a better cost in terms of manpower.
Okay. Also, I'll still stick with you, and I'll just I'll keep asking you again. So you also mentioned about some pass-through of the raw material costs in Q3. How has that impacted your EBITDA margins?
Yeah, so one of the components of our raw material is the copper, for which we have got pass-through arrangement with our customers. So whatever is the fluctuation in the price of copper, we pass it on to our customers. There could be a bit of time lag, but in terms of impact on the profitability, the copper prices fluctuation doesn't impact our profitability as such.
Okay. Coming to you, Mr. Gehlot, you talked about a little bit about the premiumization that we are seeing in the Indian car market. Top-end models are selling a lot more than the base models, but we are also seeing a lot of waiting period. So is there any gap in the supply that you are seeing in the supply chain? Because at least I have heard from friends even that there is some amount of waiting period for the top-end models.
You might be hearing this in some particular model, but as far as capacity is concerned, I think we are very much aligned with the customer. What customer is asking us to supply, we are very much on that. So there is no gap as such into that. We are not seeing anything into that at this moment.
At this point of time. Okay. Since you mentioned about capacity, you also mentioned that you have also have expansion plans. Talk to us about your expansion plans. Talk to about maybe if any new clients that you may have onboarded during the quarter.
We are already, catering to all the major OEMs in the country, to all the customers. Except there are two type of customers. First is which are very established customer. We are already with them from last many years, and there are new next generation customer also, and we are already working with them. And a few of them we are at the development stage of the product also, where you are seeing the EV two-wheelers are coming. So we are engaged with them. So there are expansion plan for those products, but they are already aligned with the customer requirements. Some of the established customer has already announced their volumes for the next year, and we are very much aligned to that and putting up our capex accordingly.
Okay. Finally, again, a question to both of you. Where do you expect to end this fiscal at, in both in terms of revenue as well as your margins?
As I explained you, that first 9 months is already covering,
Okay.
more than 80% of revenue and 90% of PAT compared to the last fiscal year. But yes, we are looking a very promising quarter, and we are very much aligned to the customer requirements. And I think it will be, as you know, that Q3 remains weak, but Q4 is always stronger than Q3 in the past. So we are also working on same, and let's see how it goes in Q4.
All right. Thank you so much, gentlemen, for talking to us, and all the best for what comes next. Thank you, viewers, for tuning in. This is Tushar for NDTV Profit.
All right. So that was Motherson Sumi Wiring. The stock is up about 0.5% in a very strong market. Now, we've been speaking to market veterans about what they think of the government's interim budget, and Madhusudan Kela was of the opinion that the government is putting in considerable efforts to uplift people that are currently below the poverty line. And he also spoke about how divestment by the government can fuel the growth of the economy going forward. Listen in.
The direction is very clear, even for the lowest create the society, the way this Pradhan Mantri Awas, this, that is getting built, they are very clear that they have to uplift a lot of people from the poverty. People who are being uplifted from the poverty, they have to go to middle class. The middle class has to go to higher class. I think housing is a very big need. It's being a very latent need. And atmosphere is just fantastic, Neeraj. To do all of this, government has so much animation right now, right? You know, because if you see when they inherited, at that time, you know, there was some food subsidy with FCI, there was some oil bonds with BPCL, IOC. It is all being cleaned up. And in a clean manner, we are talking of 4.5% fiscal deficit. And I want to tell you one thing. Government of India has become very rich. People are not realizing that India is a country. We have a fabulous balance sheet. We may have a poor P&L, but we have a fabulous balance sheet. 13 lakh crore rupees was the value of all PSU companies put together 3.5 years back. Today it is 51 lakh crores.
Got it.
So government value has increased by more than 25 lakh crores in last 3.5 years. What ammunition does it give them? You divest, you know, if 50 lakh crore is the market cap, you divest even 1 or 2%, you can raise 50,000, 1 lakh crore rupees. It can just change all the numbers on the fiscal side. And none of it is being taken. And if there is a really fabulous majority government, what stops them from selling 1 or 2 or 3 companies on a strategic basis and really get these divestment numbers really kicking in and take that money and invest into housing, invest into uplifting people?
So why is that not happening? Why do you think on the divestment side?
I don't think it was right to take that assumptions today, because again it was an interim budget.
No, but even the divestment targets for FY24, I mean, we are far away from...
Maybe, I don't know, maybe it is by design, because they have understood that there is far much value in all these public sector companies. So why just sell them for a song?
Got it. Okay.
Right, and now you see yourself, you know, today if you want to sell 10% of Hindustan Aromatic, you can get 20,000 crores.
That's true. You've been very constructive on PSU banks, yes, but PSUs as well.
PSU as a whole.
You continue to remain constructive.
Absolutely.
Okay.
Absolutely.
The other aspect is this whole rally in the capex.
However, I must warn you that railway stocks, to my opinion, I'm not comfortable with particular few stocks valuation in the railway segment. So I think either they pause or they decline. I don't know what happens, or they pass some time. But there the valuations are stretched, according to me.
All right, that was Madhusudan Kela. By the way, if you want to catch any of those interviews in as a whole, you'll find all of them on the website ndtvprofit.com, or in fact on any one of our social media platforms. That brings us to the end of this particular edition of Earnings Edge. Do stay tuned, lots more coming up over the course of the day. This is NDTV Profit.